The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 3rd, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now it's not too soon. 877-927-6648. Hey, if you can't dial in, well, let your fingers do the walking. You can always send me an email, steve at TFNN.com. You know I know how to say it. Of course, inside that subject heading of your email, please put radio show question. And, of course, inside the Tiger's Den will, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 77 points. 24,901 is the print. S&P's up 15. NASDAQ 100 up 62 buckaroonies. That's about 1%. Russell up about 1% as well. That's 15 bucks. Semis are up a little over 1%, 1.2%. That's up 15 bucks. I think on the heels of NVIDIA Corp, which is up 6% out there. New York Stock Exchange, new all-time high. That's up 47 bucks. Really, all the indices are to the upside. Spot volatility index, that is to the downside. Trade out at 918. I believe if it closes at 914, that'll tie the all-time closing low. We'll take a look at you. We'll give you those exact numbers out there. Gold is basically unchanged. It's been sitting at about up $2. It's up about 150 for hours now. Silver's up a nickel. Light sweet crude at $1.17 to the upside, 61.54. Natural gas pulling back, leading the charge dollar-wise. It is Priceline up 32 bucks, followed by Google at 21, Ulta Beauty Salon at 14.60, Amazon at 13, Chipotle at about 13, Regeneron at 12, Nvidia up 11 bucks. To the downside, it is Transdigm Group, TDG down 6.80 or 2.5%. China Lodging down $6 or nearly 4%. NetEase down 540. You've got Innovative something or other, Industrial down 480. Howard Hughes down 4 buckaroonies out there. Of course, I want to look at what you want to look at. And I don't know what that is. I don't have any requests at this stage. So let's just go take a spin around these markets, try to get a gauge for what the bulls and the bears are communicating to you and I. Let's start with just taking a look at the advanced decline oscillator readings for the New York Stock Exchange. That's the left panel. NASDAQ Composite, that's next to it on the right side. Then you've got the Dow. And finally, on the very right, you've got the S&P 500. You'll see that all those advanced decline oscillator readings, that's the bottom panel, they are above the green horizontal line of 0. That tells you buyers are in control. You didn't need me to tell you that. You just had to take a look at price to figure out, hey, who's in control of this game. There's your spot volatility index down on the right-hand side of the screen. And as long as that stays below the 50-day exponential moving average, the S&P 500 will move sideways to higher. At this stage here, it is higher. By the way, that 50-day exponential moving average line is at $10.29. You'll see that the New York Stock Exchange has completed this. If you go back and take a look at the shows over the course of the last several weeks, you drew this you drew this pattern in yourself. It hasn't moved since you've drawn that. That's with an A point. Down here on the trading day of August 18th, that's at 11,670. You went ahead and identified a B point, a swing point, out here on October 23rd. That's at 12,443.80. A little bit of a retracement, a shallow HAL retracement. Only a point, less than a 0.382. It was actually 34.27%. That was into the November 15th area. And now you are trading at the 1-to-1, 12,951.80. Now, novices, which are not you, so I'm not speaking to you, just those that are novices with regard to this lightning bolt pattern might go ahead and say, hey, it completed and I'm going to sell. But you know better. You're looking at this and saying, hey, Steve-O, look at how that price is trading on the left-hand side of that C to D leg, meaning it's stronger than that A to B leg out there. So, and look at that retracement, only 34%. The bulls are loving that. So where's price headed to in the New York Stock Exchange? The next level on the elevator gets you up to 13,162. Looks pretty bullish to me. We've got Bob from William. William from Virginia Beach, who wants to take a look at the junior nugget out there. William, thanks for calling. Thanks for holding. How are you weathering the cold weather out there?
Oh, man, we're anticipating, I think, almost a foot for tonight.
A foot of snow?
Yes, sir.
No kidding. When was the last time? Does Virginia Beach get that type of snow typically in the wintertime?
Generally around January and February, we do get a little bit of snow, but, it's not too, common around this area.
Not a foot, at least. Okay, well, be safe. Hey, take tomorrow off. Just trade.
Oh, yeah, I'm thinking about it. I think we might not even have the day off.
Okay, good, good. Now, are you in the bull position of the junior miners at this stage? Tell me what you're doing, how I can help you.
Well, I just recently, made a bad decision. I sold all my JNUG, and I was interested in it to see how the gold market was fluctuating. It was going up. They're saying that it's looking real good. JNUG, was actually climbing, and I was interested in, seeing your perspective on how the increase with gold, with all the extra stuff that's going on, how it might affect JNUG and where JNUG might go. And
sure. Okay. Now you sold it, but did you make a profit?
Oh, I caught it at its low in early December, and I kind of
perfect.
Got too excited for the trigger.
Then you made a great decision. You cannot call into this show and say you didn't make a great decision when you've made a profit. That is what this business is all about. So first of all, if we had the automatic applause sign out here, we'd all be, and they are in the Tiger's Den, they're applauding you for that trade and getting in December. It's okay that you took a profit. So at this stage here, you'd probably like to get back in. Yes?
Yeah.
Okay, so here's what you're going to do with regard to that, or here's what you and I are going to be looking at. And first, with regard to the junior nugget out here, folks, this is a chart that we have on our screen right now. What we're looking at is on the trading session of December 29th, that bottom panel of our screen, that's the price oscillator, that was nearing the zero level. In fact, it was at zero. Now, William, you're going to have to hang on through this break, and then I can tell you, that's the William tell you, what it is you're going to wait for next before you get back in. All right, my friend?
All righty.
All right, we'll be right back with William from Virginia Beach. A foot of snow. The forecast. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with William in Virginia Beach, and we're taking a look at the J-Nug. That's the three-time bull position for the junior miners. William, let me ask you a question. At about what price point did you exit the trade?
I think it was 1830.
1830, we're trading at 1860 right now. So you kind of are in a unique position since you caught the bottom. I'm going to show you what might occur out here, but with it only being about 30 cents away from where you're at, and you yourself said, hey, you think you made a, I don't remember the exact word you used, but you made a decision. You made a decision, that's for sure. Good, bad, or indifferent out here. You've got that unique opportunity to go ahead and re-enter the trade right now. And now, what should happen, what should occur, I'll show you what should occur. Doesn't mean that it will. And I will preface that with the fact that I personally, my subscribers individually, are long the metals. We happen to be in the GDX and the Nugget, but it's basically about the same. And as I have expressed to them a number of reasons why we are staying in that trade, even though we anticipate a pullback. And one of the reasons is because the pullback doesn't have to occur. I believe it will. It should occur. But I don't believe that you or I will get that entry price that we got into early in the middle of December out there. So that's the thinking and logic. When a price oscillator, bottom panel screen, gets to that zero line, what typically occurs is you will see my little red line, that's called the oscillator and change line, will catch up to price, or price will catch up to it, or both. That means we should see the J-Nug pull back to somewhere between 1687 and 1860 where it's trading right now. But it may not do that. So the question becomes, what kind of conviction when you enter this trade do you have in it to hold for the longer term? So I want to leave out there that if you're only 30 cents away and you have a longer-term horizon on this, then I say don't screw around with waiting for this thing to pull back and use a wide stop. But it should pull back into that area. Now, that's in the 3-time. I'll go ahead and put the XAU, the indice out here, and you can see that it, in essence, has been doing the same thing. December 26th is when this price oscillator got up to zero. See how price moves sideways up until yesterday when it just simply, moved higher. This should pull back as well, somewhere between the 84.25 and 87.24. But even with that, and when you're in these triples, you can get these rather large percentage pullbacks out there. You just have to expect that it's not necessarily just a one-way market, although in essence it has been since that middle of December. But if you have a longer-term view, you just have to at times go do something else and don't look at the screen as long as you have a stop out there. You mentioned gold. Gold yesterday got its price oscillator to just get above that zero line. See how today it's stalling? Now, that's not a bearish reversal signal. It's just a stall. We may see some type of stalling movement here while that red line moves up to it, or maybe even a pullback. It would be a gift. So the gift would be that prices pull back so that you can get in. Prices pull back so that I can add another position. It's a high probability, but it's not a guarantee. If you want a guarantee, because you're only 30 cents away, I'd get back in right now and just ride out the storm, just like you're going to do when it snows. You're going to get a little blizzard, but that's not going to stop you from doing what you're doing. So maybe there's going to be a blizzard with a pullback inside of the mining equities out there. But you're in a unique position versus somebody who hasn't entered the trade whatsoever. You know what I mean?
Yeah.
Yeah. So, and silver, if we take a look at silver, just to get silver right now, it's trying to get its price oscillator up to zero. That's why silver's trading a bit higher this morning or this afternoon, whereas gold isn't. That's my interpretation here. But it's going to do or should do about the same thing. But I will share with you one thing out here. Well, I'll share with you what I can, but the one thing is, and if you take a look at that set of tools and you apply that set of tools to the longer-term picture, this is why you may have caught the bottom. Who cares about 30 cents out here? You may have caught a significant bottom. And that is because we're looking at the monthly chart for the continuous gold contract. And take a look at what its price oscillator did last month. Zero line. Take a look at its test of that red line. This is where it tells us in a longer-term picture what gold likely wants to do. I can't guarantee anything, but I can guarantee you this. This is the type of bullish test you want to see. And now we just have to let the cards play out as they will. I hope that helps you out.
Yes, sir. I do appreciate it. You did open my eyes to a lot of things.
Okay. Perfect. That's all I want to do. So, hey, congrats on that trade. The applause sign is on, and if you get back in, best of luck with it as well. Thanks so much for calling, and stay safe up there. You bet. We had a request from Nick in Washington, D.C. Nick wanted us to take a look at Intel. So let's go take a look at Intel, INTC, on our 3-chart display screen. Let's try to type that in again, see if that works. Intel had pulled back. In fact, it is down at the lows of the day out here. Now, that's certainly going to impact one of the stocks, one of the top 5 weightings, I believe, inside of the semiconductors out there. But semis are moving higher nicely thus far. Imagine what they would be doing if Intel didn't have a snafu. Well, maybe, right? Because who knows which other stocks inside that sector are picking up the ball, so to speak. But Williams' question specifically was he got in at 44.70 this afternoon going long. And what's your opinion for going long Intel? So if we take a look at Intel, here's what we know, and that is the following. Nick, you've got a stock that is pulling back into a little bit of a breakout area that had 50 million shares. You've done 48 today. Never a good scene. That says that you should anticipate that Intel is gunning for this little sign of strength, which is anywhere between the price point of 41.59 and 41.58. To me, it looks like at a minimum, Intel should pull back to the 43.10, 43.48 level. As it's doing that, you'd really like to see volume of less than 90 million shares. Intel may be in nothing more than a consolidation pattern. And that consolidation pattern, Nick, looks just like this. This is the yellow rectangular box out here. Now, being able to identify a consolidation is perhaps one of the most important things that you and I and everybody else can do that is a visual trader, that is a technical trader, because consolidation patterns can be the nastiest things to go ahead and trade through, because you can think that you got into this from a long-term, long position only to see it move up, and then to see it not be able to bust through and then pull back to the bottom of the consolidation. There's nothing wrong with it. It's just if you're a long-term trader and not trading these swings from the bottom to the top and the top to the bottom, it can get awfully darn frustrating. I don't know what kind of a trader you are out there, but this thing is headed back towards the bottom of that consolidation area. That doesn't mean you need to sell it, but that's where it's headed to, depending on your trading plan, or that's where it should head to. It's got all the characteristics you need. It's got volume. It had already rejected the high. It doesn't matter what bug they have. The top of the consolidation sort of set itself, hook, line, and sinker, on December 21st. So best of luck with that trade as well. When we get back from this break, we're going to go take a look at, I think it's Kansas City Southern. It's KSU, not KFC. Kentucky Fried Chicken, yeah. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You can give us a call, 877-927-6648. The phone lines are open. Don't forget, you can always send me an email, steve@tfnn.com. Just put radio show question inside that heading in your email. That'll make it easier for me to catch as I look at my cell phone to pick up all those emails. We had a request to take a look at Kansas City Southern. Now, this listener, watcher, viewer has a long-term perspective on it and is asking for the long-term target. First, let's take a look at what it's done on the shorter term on a daily chart out here. We can see that it completed, looks like it completed, an A to B equals CD to the downside, that little lightning bolt pattern. It did that 2 days ago when it made the 1 to 1.272 price projection. Here, I'll clean up the screen just a tad, make it a little bit easier for you to watch along out here. We're going to simply turn off our profiles, and you'll still see the yellow lines making up that lightning bolt. You can see how price got to the 1-to-1 area, 107.11, but that's not where price stopped. We didn't know if it stopped there. We knew if the cavalry arrived, that was telling us that that's all it was going to do. But no, price went lower, got into the 105.57 level. And it was yesterday, that was when the cavalry arrived. That gave you your little bull separating line out there. That's the completion of the A to B equals CD. That is a Gartley buy pattern out here. Now, every Gartley buy pattern, should this one work, they don't always work, but let's assume that Kansas City Southern is going to work. There's 5 different outcomes, and from the longer-term perspective, it's outcome number 5 that you want. Just as this made an A to B equals CD to the downside, a Gartley buy pattern, of which there are a couple that we can choose from out here. We'll take the most conservative one. The most positive outcome is outcome number 5. And that's where this turns into an A to B equals CD to the upside. So should this continue to retrace back towards its high of 114.85 on December 4th, then we'll say the next intermediate term move will take you up into the 118, 121 level. That's taking a look at the daily time frame chart. If we take a look at the longer time frame out here, we already have, I believe we have, a confirmed A to B equals CD to the upside. 21 million the month of August 2016. That swing point was crossed with 23 million shares. So KSU headed to 117.54, probably back to its highs from the month of November in 2014. And that's up in the 126.49 level. One thing at a time, but it looks like that's where Kansas City Southern is headed to. Now, I don't have any other questions that I see that have come in, so let's go back and take a look. We were taking a look at the summation products out here. We'll take a look at the advanced decline information. Yeah, we're looking at the oscillators. So 1-to-1 is where we have completed on New York Stock Exchange. Nothing suggests to you and I at this stage here that that's it for the move. Oh, we mentioned the spot vol. Oh, well, hey, geez, we could go in so many different directions here. Let's take it one step at a time, though. Well, I did mention the spot volatility index. Here is the spot volatility index on a closing base. So we're using a line chart out here. Right now, priced at 914. Well, I'll be a son of a gun. Not that it really matters. But the lowest closing low that I see in the history of the spot volatility index is 914. That happened on November 3rd, 2017. So if you're all about setting new records out there, you're looking for a close below 914. Now, look, let's face it. On November 3rd, 2017, versus where we're trading today, which one is higher? Yeah, and when I say we're trading, I'm referring to the S&P 500. That was how you ask a question so you can take a strategic swig of the Zephyr Hills water. That was a Doble Gee swig out here. Does it matter if the spot volatility index, if there's no fear in the marketplace? Come on, that's a lot of hogwash out there. You can't trade off of something that they call fear or no fear. The bottom line is, does a low closing low in the spot volatility index mean that we're at a high inside the markets? Has it ever meant that? And the answer is no. You know that as well as I do. I just pointed that out for a piece of food for thought, I suppose. But don't eat that. If we take a look at the NASDAQ, right? NASDAQ, 7,000 is the number that's talked about. You knew that 7,000 was no big deal. The big deal in the NASDAQ composite is going to be around the 71, 77 mark. Why? Because that's the next horizontal trading range on the monthly basis. You got to love the work that Bud Rolfs did. I just simply went ahead and used that work, programmed it into the e-signal software out there so that I didn't have to visually go figure out where the largest number of co-located opens and closes are. We know by looking at this chart, it's down at 21, 28, 29 if we want to go ahead and get right to the scintilla out here. We don't really need to. Once you have that, and then the second largest area, which is either 2969 or 1286, looks to me like it looks to me like it might be 1286. Then you have the price difference that you just simply add to have those horizontal blocks, and for whatever reason, because price is right, they move sideways, they move lower left to upper right, they move upper left to lower right, right there. They're moving up, they're moving down, they're moving sideways. Sometimes it's a combination of two of those things out here. In this case, 7177 becomes the next number to be watching inside of the NASDAQ composite. Could we get some type of short-term top there? Absolutely. Will we? I don't know. We'll just have to come back and take a look at the patterns that are going on at that stage of the game. If we go back and take a look at that New York Stock Exchange, you know, the only negative out here, if I'm going to find one, is the fact that that advanced decline oscillator reading is not above the level of, well, let me move this thing so I can actually read it myself, that it's not above right now 63.14. You're at 50.65. And it's not above 71.73. Those are highs from trading days and prices trading. Let's just draw the line out here. It's not a problem at the moment. Could be a problem in the future out here. It's something that you and I pay attention to because you're always looking for, hey, when's that next retracement going to occur out here? And when you have kind of a decline, not kind of, when you have a declining tops inside that advanced decline oscillator reading, that's that bottom panel, and prices moving higher, it's always one of those things that makes that sphincter muscle get just a little bit tighter out there. But that's about it. That doesn't mean that it is over. Not by a long shot. So what are we going to look at next out here? Let's go take a look at some of these records that are being broken, some of these areas of resistance that are falling like flies out there. And, well, I take that back. Hey, wait, Steve-O. What do you mean? Well, let's take a look at the Dow Equity Futures contract and the Russell 2000. Those are the two right panels on our screen out here. They're the ones that haven't acknowledged the so-called breakout that's going on inside the markets. The level you're going to watch inside the Dow Equity Futures contract, yeah, it's not there. It's 24,870. Is price going to get above that? I don't know. If it does, though, it's an acknowledgement. It's one more yay for the markets moving higher, even in this unfavorable seasonal cycle, as short as it may be. It's just like a blizzard out there. I don't know. Do you call a foot of snow a blizzard? In Florida, we would call that a blizzard. In the East, probably not so much. Hey, the number in the Russell 2000, the equity futures contract there is 1552.10. You wake up in the morning, prices above those levels. There's no blizzard in the daily equity contracts for the futures market. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Phil writes in. He's in Roku. Looks like got into that trade earlier this morning at about about $53 out here. It's trading at 56.33. And the question is, this stock, is there some way for us to try to identify where a top might form out here, which is kind of difficult to do on this equity because there's such little information. But here's what we do know about Roku at this stage, Phil, just looking at the daily chart. We can see that price was moving higher, doing less relative energy. At the same time, that was on December 20th, the very next day. Makes a time to mark 9 setup. Price should pull back from there. It has. You had a little shooting star candle from December 28th. Prices bounced up into Stevie's red line, probably 56.24. So we're sitting at that level. That doesn't mean that this is a top, but you want to see price. And let's go take a look at volume-wise. What is it doing today? What this is doing today is trading inside its swing point, albeit there aren't many to look at. But the one from December 19th, 11.3 million shares. That would equate to about for the 7.1. I'm sorry, 7. It's going into that, but it's done 7.1, which equates to about 11.5. So you're going to do about the same value. What you should see out here, Phil, is the 58.80 get tagged. If it gets taken out, then this thing continues to march forward. I don't see anything bad about Roku, but there is such little information out here. It's really hard to technically trade. But thanks for writing in. Best of luck with that trade. Let's go out to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How are you doing? Happy New Year to you.
Doing fantastic, Steve. Happy New Year to you as well.
Thank you. Thank you. I was out passing Martinez, California back in early November. I thought about you. I said, hey, maybe we should stop and see Brent.
You should have.
Well, I didn't have the address, but I didn't know I was going to be passing it on the Expresso as I was headed up to Napa Valley. But so what do you want to look at today?
I'm in AK Steel. I bought into that. I hit that round number low of $4.
Oh, nice trade.
I got that down at 430. It was kind of a mixed bag. It doesn't have all of what I typically look for, but I kind of, if you go back longer term, there was a low back around the beginning of 2016.
Sure,
about
I see
64.
Yeah.
And then it went up to 1139. If you take that retracement down to 4 is about a 786. So I went ahead and bought it there. And my other question is, it looks like now it's made enough of a move that you can kind of take a channel line from that high down to the $4 level, and it looks like it's gotten above that now. I just wanted to see what you
do your channel line work, are you using the bodies of the candle, or are you using the tops and bottoms of the candle itself?
I'm using the bodies.
Using the bodies, okay. So yeah, definite breakout above that level about 3 trading sessions ago is the way that I see it. What it's doing right now, here's the next level that you want to be observing, and that's where you're trading, 629. You're trading at 629 right now. That happens to be the top of its daily profile out here. And closing above that, in essence, the meaning is you've closed above resistance. Old resistance should become new support. You like the mere fact that this formed a new profile above the other profile, the previous profile, so everything is headed in the right way, in the right direction. If we take a look at that was the weekly chart. My apology. That was the weekly chart we were looking at. But still, just as important because it's a weekly profile out here. On the daily chart, so that was where my channel lines were off of the daily candle. So off of the weekly candles. I'll get it right eventually, even though I'll confuse the heck out of you. So on the daily, looks really good because yesterday was just simply a nice wide-ranging bar candle with some pretty decent volume, 25 million shares. But price has stopped into that next resistance level, being the weekly area out here. So clearing that would be helpful. This has I suppose a small A to B equals CD as well. If you use December 11th as a swing point, that was 17 million shares. And, I'd just say that yesterday's volume was a confirmation of that. But I really think it's these profile areas that you next need to watch. Assuming that price closes above 629 or when it does out here, then what you'll be looking for is 688. That is on the monthly chart out here. That's its profile. And closing above that, that would be a beautiful thing because that would then suggest to me that this thing is headed back towards its previous swing points out here. And those, in essence, are in this range of about 1137 out here. And you really won't know what price is going to do once it gets up there. But that's a pretty stiff resistance zone. We take a look at the monthly charts because the last 2 times that price was up there, the following month, meaning price got up there in August 2014, bearish reversal signal that next month with 322 million shares. Then it took all the way into 2016 for price to test that area. It got up to 1139, tested it, rejected it. You had a nice little reversal candle
About that, and Brent especially, I lost power at the house, so my generator has kicked on. I can at least look at the screen. I have no idea what you heard or didn't hear. But when we come back from this breakout here, I'll wrap up taking a look at AK Steel. Nothing is going to keep us down, not even losing power. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. And Brent, my apologies to you for losing power here. So no idea what you did here, but let me just kind of summarize this for you and then run a quick question past me. But this, what you want to see this thing do is clear the 629 level. And right now, it may take a little while to do that because it's really trading into that downdraft area from October 30th. I take a look at the weekly chart, and that was some pretty good volume there, 216 million shares. And the same thing from July 24th, 2017. So a lot of those folks may be just simply trying to get their money back. But if, in fact, price can clear that 629 level, you ought to see it move up to 688. And that's the top of its monthly TAS market profile. And if it can clear that, then I say AKS Steel heads to 1137. And that's the area where there's some significant resistance that takes you back into August of 2014. So what question do you have from there? Because I don't know if anybody even heard any of that stuff earlier. I might have just been talking to myself. Do we have Brent? Shoot. If we do, I can't hear you. So I'll have to... you there, Brent? It's not smooth. Not smooth. If you're there, breathe. Sorry. It's not happening. It's not happening. But hopefully that helps you out. Hey, give me a call or send me an email if you'd like. But you can give me a call tomorrow. Hopefully I don't have any power issues here. I heard my neighbor's generator that was on, and so it looks like we've got a issue in the neighborhood as well. So, folks, stay tuned because we've got the great lineup on Wednesday. You've got David White, Power Trading Hour. He's up next. Tom O'Brien from 3 to 5. There's not a whole heck of a lot more information I can give you. I can say that on my 30-minute charts for the Dow, for the Dow Equity Futures contract, for the ES Mini, it's indicating that we may see a bit of a pullback here, perhaps for the next hour or so. Hey, thanks so much for being here, folks. We look forward to seeing you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.